All right, we are live here. Give us a few minutes while we go to all platforms. Hello, David. I see you in the chat. April, thanks for tuning in early. We'll get started here in just a minute once we get live. Here we go. A few more people. Welcome, everybody. Thank you for tuning in early. Give it just a minute for everybody to get connected, and we will get into the show. Here we go. Welcome, everyone. Thanks for tuning in. Looks like we're just about live on all the platforms. All right, there we go. A bunch more people just kicked in. Thanks for joining us. Thanks to everybody in the chat. Let's go ahead and get started. So thanks everybody for joining us today. My name is Nick Hershey. I am president and founder of the Mortgage Calculator. We are a lender that focuses on non-QM and non-traditional mortgages. And that's what we love to do here today is our favorite product of all. We're going to go into a deep dive on our DSCR. So this is a show we're going to do every Monday for our realtors and our investor partners. And what we want to do today is instead of going into more of a loan officer training, we want to actually pull up a live real estate listing and see how we would actually purchase that listing and see if it does DSCR. So that's the whole premise of the show. So I'm going to go into just a little bit of basics on DSCR just for everybody out there so we're all on the same page. And then I'm going to pass it over to Jose, our sales manager and 27-year veteran, who's going to actually go into a deep dive, pull up the actual listing, dissect it, and actually give you guys a real live quote that will actually work and be a slam dunk deal. So that's really Jose's specialty, is really structuring these deals to make sure that there's really no way to fail. And that's the beauty of these DSCR loans as well. Not a lot of income or curveballs can come in. We simply have to deal with the rent of the property. So let's go ahead and talk about what a DSCR loan is first. I'll give kind of the basic overviews, and then Jose will kind of go into the specifics. So first off, a DSCR loan is our investor loan for investment properties only, and it is for investors to purchase rental properties without personal income or employment. We're just going to use the rental income from the property, and that's from the 1007 if it's a single unit, or in most of the examples, a lot of our investors are buying multi-unit properties, and that would be the 216. But the estimated rent schedule that we get, we're going to use that to cover the PITIA for the mortgage. So it's a pretty simple equation there. It's just the gross rents over the PITIA, and we just have to make sure typically that we cover it over a 1.00 ratio. Now there's lots of ins and outs of this, so please get with our team of professionals. That's really what Jose does, and that's really what we're going to focus on today, is how do we actually calculate the DSCR and how do we actually find the right program that will fit for that, because we do have options for no ratio. If we have problems, we do have options to use short-term rental income if we need to use short-term rental income. We do have options to do a 0.75 ratio, not quite cash flowing, still gives us great rates and LTV options. And then, of course, if the property is cash flowing over 1, we typically have even more options. And then now, as different investors are offering different programs, a lot of times we're getting some bonus programs for DSCR programs that are like over 1.25 or over 1.5, and we're getting better pricing on those as well. So the DSCR has really been developed as a product, and now we have a lot of different offerings and a lot of different ins and outs, and that's really where our team specializes, in that DSCR product and how to fit every scenario in there. So Jose will go into an actual deep dive example. Let me go ahead and just pull up some general rates on our DSCR, just kind of like we do every morning. And this will give everybody an example that we can start with, and then Jose will go deep into it. So give me 1 second. Let me pull up our pricing tool and reshare my screen here. There we go, nice and big. Let me zoom in a little bit. So this is our pricing tool here. Let me go ahead and pull up a basic scenario for just like we do every morning. The most common scenario and most common request is going to be an 80 LTV, 20% down payment, pretty standard, especially for an investor program. Some investors are used to putting down even more, but this is pretty standard for DSCR. And every morning we typically look for a price of 99. That means 1 discount point and buy down. So that's typically what I set up the pricer as here for our example scenarios. For our investor DSCR programs, we're going to go under expanded guidelines, aka non-QM. So we're always going to set that when we're looking for some options here. And of course, these are only for investment properties. And in this case, we're going to do a single family unit. I believe Jose's example today is going to be for multi-unit, and typically our investors are requesting multi-unit. So that does increase the complexity a little bit. That's why we love to do a deep dive on something that may be a little more difficult. But for our pricing example here, just so everybody can see what we're dealing with, we'll keep it as 1 unit. And we'll keep Florida, Miami-Dade just because that's where we're based. 760 as the credit. In non-QM, obviously, we can get some pricing bumps too, usually at even higher credit than that. This will be a good first scenario. But again, that's where kind of Jose's expertise comes in. Depending on the credit, obviously affects the program that we're going to use as well. So this is a great example for some general scenarios, but Jose will kind of break down how it actually works in real life. DTI here, fortunately, the DSCR doesn't actually use the DTI, so this actually won't be used in this scenario. We come here to our income. We're going to use our DSCR programs. And for most of our standard scenarios, we're going to price a 3-year prepay. I'm not sure what examples Jose's set out on his example. Some might have more prepay if we want to get a little bit of a better price, and some may have less prepayment penalty if a borrower requests it. So we do have lots of options there, but this is a typical scenario for a DSCR that I just want to make sure we set everybody up on the same page of what kind of program we're talking about here before we go into the deep dive. So let's check out our actual programs. And this is actually live. Let me get past here. I think that's the cars. All right. So this is great. We have actually some lower rates than we did even this morning. So I did this show this morning, and the lowest rates we had was at 8,375, I believe. And looks like this morning, again, this is for the higher ratio programs, as we just explained. Someone came out with a program for greater than 1.4 ratio, and Jose will explain how we can actually attain this program and how he can do the analysis for that. But our best rates here are around 8 with 0.975 in discount points. That's a typical DSCR. But you can see here we have tons of options with different DSCR values in different programs. Some of these use short-term rent, long-term rent, and there's just dozens of programs. So a whole bunch of options. I love to just make sure everybody can see all the different options we have. And so you see when Jose's pulling this up, Jose actually has to know all the guidelines of all these separate programs. These are all individual programs that all have 100 pages of guidelines that Jose can navigate for us to make sure that we're picking the right one that fits our exact scenario. They all are similar in that they don't require personal income, but we got to make sure the property fits. So that's what we love to do this show for today, is to get into kind of a deep dive on what are the actual ins and outs of how to make this DSCR program work. Both for our team. I know there's a lot of our team tuned in here, so thank you guys for tuning in. And as we mentioned, for real estate investors out there trying to figure out how they can use this program to their advantage, and of course, realtors. So we want to make sure we invite any realtors that are out there watching. If you have a listing that you'd like to promote and have us run the live analysis, which we're about to do on, please send us an email. My email is right on my name thing here. It's just nick@themortgagecalculator.com, and we can go ahead and line you up. One thing I do want to go over probably before Jose goes into detail is run a quick scenario on our max LTV. Typically, we can go up to 85 LTV on our DSCR programs. So let's go ahead and just pull this up real quick as a pricing scenario so that we can check out what our options are there. So you see we have 3 distinct programs, obviously much higher in rate there, that actually go up to 85 LTV, which is pretty unreal right now. So DSCR, 4 years ago when we started doing this, these products started coming out, there was no such thing as this high of LTVs. And now that we've gotten real flexibility, as long as we have strong borrowers and strong properties, as Jose is about to analyze a very strong property, we can fit into these programs and go up to 85 LTV. So this is amazing that the markets have opened up these investor programs to these high of LTVs, and some great options here. Just obviously it's going to be, maximum limit, and there's only really 3 actual programs that do go that high, but we love to show that we do have those options. So great examples there, but let me go ahead and switch it over and pass it off to Jose, who can go into our detailed dive. So are you ready to get into it, Jose? I'll put up our graphic too, so we got something to look at. I think you're muted, bud.
I do have the property that we're going to be analyzing. And for those of you that may have an interested prospect, please reach out to me, because this is a listing that I have of a 2-unit, which we call here in South Florida a duplex. In some of the markets, a duplex means a 2-story condo. So I want to make sure that you all know that in South Florida, duplex means a 2-unit residential property legally occupied by 2 separate families. And up in the Northeast, that's a 2-family. I think that's what they call those up in the North, 2-family. So here, whenever we have a property, obviously like this, first thing that we do is we want to vet the property. We want to make sure what condition the property's in. We want to make sure that it's an actual duplex. We want to have an idea what the taxes are and what the insurance are. Well, insurance won't show up in this report. I happen to have the insurance information on this though, but that's all the kind of stuff that you want to do. So, we got our little our description there. Here we show it is 2 units, right? We got our living area there, general living area. We want to look at when they bought it, all that kind of stuff, legal description. So you have an idea of, public records type information that you can get.
Why do we need to look up when they bought it, Jose? Just for anybody else.
Right, because we want to determine seasoning so that we know what would be our options here. Now, seasoning would refer to how long the current owner has been on title. It's important in the refis, but equally as important in the purchases, because in some of these options, the underwriters do look at when the seller bought the property. And if it's less than a year from when the seller bought the property, they may add some overlays stating, for example, we're not going to allow you to have anything higher than the purchase price. Let me see if we find that here. Anything other than the purchase price plus the repairs. And I think that we may have that information around over here coming down pretty soon.
I actually had the last sale at the top.
Oh, yeah?
The very top.
Right through. I went right through that one.
To the very, very top. Last sold price.
And all right. 1/31/2022.
There you go.
Right, so we have more than a year of seasoning on this, which is essential to knowing that we will have absolutely no restrictions on anybody that buys this property having to do with seasoning. Even a conventional loan would have no problem. Nobody would have any problems with this. So then, we like to look through the photos too a little bit, see what condition it's in. Make sure that, there's no gaping holes, hanging wires, whatever it could be. The more information that we have on a property, and in this case, it is currently listed with a lot of photos, which is good, all in good quality, right? So you all see, we go through all the photos there. That's the back unit, and that's what we got there, right? So now I went ahead and did my market rent on the property and came up with some numbers here where we're looking at projected rent of the front unit of about 2,400 per month, and projected rent for the back unit anywhere from 16 to 1,800. It's probably closer to the $1,800 figure than the $1,600. So that would be anywhere from $4,000 to $4,200 a month, right? Now I'm going to show you the actual rates in a minute, but based on the $4,000 to $4,200 a month, we would need an interest rate to be somewhere between 7.49 and 8.25, depending on the final numbers on the market rent study. So 4,200 would be the top end of our rental range. 4,000 would probably be the bottom end of the rental range. So, when we're doing our analysis, keep that in mind. We really won't know until we get the appraisal back, which is why we don't really submit these DSCR loan files to underwriting for a final review until we have an appraisal, because on the DSCR loan, the appraisal is everything having to do with the income as well as the property value. So looking at the 4,200, the upper end of the range, we could still be as high of an interest rate at 8.25, and the property would still DSCR above 1.0. And we could be definitely, we could still buy the rate as low as 7.499 and still be in compliance on our points and fees test, and definitely be DSCRing there above 1.0. So we got a pretty good situation here. We probably would not be able to do the 85% option, because at an 85%, the rate is substantially higher. Minimum rate, I think we were looking at, the quote Nick just did was somewhere around 9.5 to around 10.25%. And mind you, already at 8.625 at an 80%, we are already at 4294, which would take us below 1.0. And the 85% DSCR option does require a DSCR, I believe, 1.2 or above. So we won't quite make it in with this one, unless it would be like really being able to buy the rate down really low at an 85, which is going to be a higher payment than this to begin with. So this, but at an 80% is still amazing. 20% down to be able to DSCR at 1.0 or above and get these really good rates. Because keep the following in mind. Yes, theoretically, you can do 85% loan to value, but it comes at a cost. So and sometimes that cost makes it, really not cost effective, because if I'm doing 8.625% here, or let's say, to keep it within 1.0, right? 8.25%, right? That'll keep me above a 1.0, and that's costing me with my loan amount. Hold up a second. With my loan amount of fourth, yeah. So that's a little bit above 1 point there. That's being charged at that 8.25. So that's not so bad, because just keep in mind, if you needed to buy it down at that 85% LTV to something that would work, you'd probably be having to pay like 3 points buy down, and you'd have like a really high rate. So at that point, you got to weigh what your options are. The high LTV program tends to work out for those properties that are really cash flowing well. Usually tends to be lower price properties that have high rental rates. So here again, 80% loan to value, nothing to scoff at, especially at these rates, which are not much higher than what you're going to encounter for a Fannie Mae full doc at a lower LTV, which this is not what this is. So now we're going to go with the same property, but now we're doing cash out refi, where the maximum LTV is a 75% loan to value. We're still dealing with the same numbers. And here at a 75% LTV, sky's the limit here. I mean, here it really depends what the comfort level of the investor is, where they want to be with the monthly payment. That's all what it boils down to here, because let's say we're at the low end of the spectrum, it's going to be 4,000. Again, it would be the 8.25% rate again. That seems to be the sweet spot for our scenario here. But if we're at 4,200, if that rent roll, market rent roll comes in higher, comes in at the upper end, 4,200, which it probably will be, we could go as high as 8.875, which is the highest rate, lowest cost option for this program, and still be above 1.0 on the DSCR with a 4153 total payment. That includes PI, TI, where we are projecting 4,200 a month for the rent. So for the total rent between the two units on the high end. So we're still above 1.0 here. So again, this one is not one that's going to take a lot of work to make it work, because it is a good cash flowing property. So we don't have to worry about going to short-term rents, trying to get too creative on what option we use to determine the market rent. Because again, that's one of the great things that the mortgage calculator is, that since we have so many options, if we can't, and as you saw in the last episode that we had a great, amazing trophy property, but apparently due to the fact it was at the upper end of the range, because it is a short-term rental property, where some of the value for the property is due to the fact that it's generating much higher income because it is a short-term rental, then for that one we had to employ our short-term rental option to be able to achieve the objective. But in this case, the property cash flows, we have a few more options at our disposal. We can go with the more traditional, quote unquote, DSCR option, if that actually exists, traditional DSCR option, right? And then, close as needed. No real big headaches with this property, neither as a purchase nor as a refinance. We can take it to the 80% or the 75% limit on both.
Beautiful. So the answer is yes. This property DSCR is pretty much anything except the 85. That's kind of why I wanted to go over the 85 earlier. We have it. It's going to be more viable for single units. Obviously, it's not going to go up into the 3 and 4 units. I believe we can do it for 2 units, but as Jose outlined, the rates would be too high to actually DSCR. So we probably should have done a no, Jose. So we should have done a no and 2 yeses. But
the 85 probably a no. Yeah, I'm pretty sure, and the 80 definitely a yes. And the maximum cash out option on the refi is always 75, and that one's definitely a yes as well.
Yes, sir. So does it DSCR? The answer is yes. So great listing there. I know that was your listing, so you spoiled yourself. If you guys have anybody wants to do their own listing on the next one, let us know. We can even do something that's over 4 units. So we can do a 5 to 8 if we want to. So that's obviously an option. If someone has something pretty unique, give us a challenge. See if you can stump the Jose man and get something that won't work. Obviously, that doesn't help you to get something that doesn't work, but we would love to show you the options that do work for your property. So thank you, Jose. That was awesome. Let's go ahead and wrap it up for today, I guess. If you guys have any questions, feel free to follow up with us or go to themortgagecalculator.com. That's our website. You can also get these DSCR rates on our website. If you just go to themortgagecalculator.com, at the top it says DSCR mortgage rates. You can go ahead and click there and actually do what I just did live on the show today and check out our business purpose DSCR pricing. Obviously, if you want to get a full quote, as Jose broke down with all the different options, so you can see which option will fit your exact cash flow and work with one of our loan officers, please go ahead and reach out to us. We have over 300 loan officers. We're licensed in 19 states for primary and second homes, but we can do these DSCR loans in almost every state in the US, and we absolutely love these loans. So thank you guys for tuning in today, and we'll be back again next Monday with a new listing to see, does it DSCR? Thanks, everybody. Have a good day.
Thank you.